Hello, and welcome to the inaugural episode of Sopra Banking Software's new webinar series, where we bring you short but in-depth live presentations of some of the most important subjects in the banking industry. This is a short 20-minute webinar presented by Sopra Banking Software and Sopra Steria Next, the consulting arm of the Sopra Steria Group. My name's Will Kitson, Head of Content and Research at Sopra Banking Software. And today I'm going to be talking about the impact that the novel Covid-19 disease and ensuing global crisis have had on the financial industry, and how banks and other important players are using technology to fight back. I'll also be joined by Laurence Niclos, Director of Financial Services at Sopra Steria Next, and Yann Mespesquier, Director of Corporate Strategy at Sopra Banking Software, who will be leading the Q&A session. You can use the chat feature at the bottom of your screen to ask questions during the presentation, and a select few will be answered by Laurence and Yann at the end of the webinar. Before we get started, it's important to note the devastating impact that the novel COVID-19 disease is having worldwide, and that no matter what we do, nothing can truly reverse the suffering already caused. However, while we're not ignorant to the tragedy that we're in the midst of, we also know that it's important to be looking forward, to be fortifying ourselves against the impacts of this catastrophe, both now and in the future, and to do everything we can to ensure that the financial world remains as stable as possible, to ensure the stability of banks' billions of customers worldwide. In this webinar, we've identified several key areas where banks have been hit the hardest and the significant changes they've had to make as a result. These fall into the following brackets: short-term, immediate decisions to be taken during the height of the current crisis; mid-term, novel solutions to bolster banks and their customers for the near future; long-term, taking the right steps and lessons learned to prepare for the future. During the first two sections, we'll be looking at key issues banks are facing and why they're important, before looking at best practice solutions to those problems using real-world examples as use cases. So let's begin by looking at the short term and the immediate decisions to be taken during the height of the current crisis. We can start by looking at how banks can deal with the new influx in demand from clients. For many banking clients, these are worrying times. Banks are facing an unprecedented demand, especially in digital services and helplines, because of the closure of physical branches. There's been a rise in the number of clients needing to access banking services, and banks are facing a strain in their ability to respond to the high volume of requests they're receiving. In response to this, first and foremost, banks need to ensure that they have the right channels open to their customers by increasing their digital services. We can look at La Banque Postale as an example of how to respond. The French bank offers its clients multi-channel access through its banking app. And since the COVID-19 crisis, the bank's application has been widely used, managing an average of 50,000 calls a day, as well as 3.3 million website visitors per day. Banks can also train and delegate existing employees to take on more customer-facing roles. For instance, online chat and troubleshooting via digital banking apps. We can look at TSB Bank and how they've reassigned 250 low workload employees to respond to customer requests via online chat applications, therefore alleviating the pressure on their frontline employees and being able to respond to a greater number of customers. Furthermore, banks have been going the extra mile in ensuring their customers have the digital hardware needed to access online banking, and this is proving to be a fantastic best measure. For example, another British bank, Lloyds, is distributing tablet devices to clients who are isolated, therefore allowing them to continue accessing their banking services during this period of confinement. If we move on to another common topic of remote work, that's not of course unique to the banking industry, but bank systems are being overwhelmed by the now large numbers of remote employees. Of course, many banks' workforces have had to go remote in order to respect social distancing and the lockdown. This presents problems in itself, with digital systems being overwhelmed, meaning the bank may not be able to function internally among employees or externally for clients. In order to combat this issue, banks can organise and stagger employees' usage of key tools on the system to ensure that only vital operations are being performed at the vital time. We can look to Citigroup and Wells Fargo as examples of best how to tackle this problem. These North American banks are stopping employees in different time zones from logging onto the server at the same time, therefore reducing strain on the system. Soprasteria is a leading technology provider, and we've seen clients ban video conferencing among staff to reduce the strain on bandwidth. And finally, Gulf Coast Bank is ensuring employees use VPNs to create secure home networks while working remotely. All of these are great examples that banks can follow in order to ensure they're able to cope with the new high levels of remote workers. Moving on to clients and how some have been forced to defer on loan payments and guaranteed loans. This is both for individuals and businesses. Of course, the deferral of loan payments from businesses and individuals creates significant challenges for both banks and their clients. It's absolutely vital that banks understand and sympathise with the precarious nature of customers' individual financial problems. Banks also need to work closely with software providers and governments to keep abreast of changes in regulations and guidelines, but more on this later. Banks also need to be as reactive as possible in implementing new systems and offers. And finally, they need to prepare tools to manage customer databases. Again, banks should work closely with software providers to be as effective as possible in implementing such measures. Sopra Banking software has helped plenty of its clients in implementing mass treatments for postponing loan payments and preparing state guarantee supporting loan reporting. La Banque Postale has also set up loan deferrals and raised authorized overdrafts on a case-by-case basis to help its clients. In addition, the bank set up interest moratoriums on maturities automatically for professional customers and on request for companies. If we look at how countries themselves and their governments are helping clients, we can see that France has helped self-employed and liberal professionals by ensuring that their monthly deadlines will not be levied. Pending further action, the amount due will be spread out over subsequent due dates. In Germany, risk assumption is being raised to 80% for the on-lending financing partners, usually the regular banks, for large enterprises, and up to 90% for the on-lending financing partners for certain SMEs. And in Nigeria, the federal government is seeking to cut planned spending in 2020 budget by about $4 billion US, including a 20% cut to capital expenditure and a 25% cut to recurrent expenditure. Another important issue is changes in compliance during this difficult period. Now, as many people know, banking regulations are always in a state of flux, but given the current crisis, some are being delayed. Banks need to be aware of such delays to ensure they remain compliant. Banks also need to know of new dates occurring around regulation so that they can be prepared to make necessary changes as and when. Here are a few key regulation changes that are occurring around the world during the current crisis. In Europe, the European Banking Authority has postponed EU-wide stress tests to 2021 in order to allow banks to prioritise operational continuity. Furthermore, the European Central Bank has postponed the release of Basel III banking rules reform from January 2022 to January 2023, again due to COVID-19. In the UK, the Bank of England cancelled the 2020 annual stress tests of 8 major UK banks and building societies. It has also launched a postponement of supervisory programs. And finally, in the US, the Fed, the Operations Clearing Corporation, and the Federal Deposit Insurance Corporation have issued an interim final rule which provides banking organizations to implement the measurement of credit losses on financial instruments before the end of 2020, the option to delay for 2 years. These are just a few examples of changes in regulation that are occurring around the world. But of course, this depends on the geography. In terms of banks, it's incredibly important for them to be in regular contact with their software providers who are already adapting their offers to fit with new compliances and regulations. Banks also need to check new rules and regulations and adapt accordingly. They need to be aware of specific regulations that are changing and the dates on which they change. Furthermore, they need to monitor all important regulation timeline changes in order to be able to enable savings or to free up investment capacity. Moving on, one of the unfortunate side effects for banks in terms of the current crisis has been a spike in opportunistic fraudsters looking to exploit the situation to take advantage of organizations and individuals. And despite the fact that only 2% of surveyed financial services leaders view security as a critical issue in the short term, according to a Gartner study published 23rd of March 2020, it could cause significant damage to banks and their customers. Non-tech savvy bank customers are a particular risk from some of these main threats, which include phishing, emails claiming to be from national or global health authorities with the aim of tricking victims to provide personal credentials or payment details, or to open an attachment containing malware. BEC, the FBI anticipates a rise in business email compromise schemes related to the COVID-19 pandemic. Telephone and SMS fraud. Fraudsters are sending SMS and calling victims, pretending to be clinic or hospital officials who claim that a relative of the victim has fallen sick with the virus and request payments for medical treatment. Once again, banks need to be aware of these in order to protect both themselves and, more importantly, their clients. Banks need to be aware of novel and trending cybersecurity threats that target banks themselves and their clients. Furthermore, banks need to alert their customers of the latest cybersecurity threats. We can look to the Bank of Ireland as a great example of how to do this. The Irish bank has been telling customers not to respond to any SMS or email asking for personal information. Furthermore, banks can train staff in best practices in detecting and avoiding cybersecurity threats. Soprasteria is a leading technology provider, and we've seen clients informing their employees on how to remain vigilant against cybersecurity threats while working from home, thus protecting the company and its internal services. That's all from the short-term problems and issues that banks are facing and how they can overcome them. Let's now move on to the midterm and the novel solutions to bolster banks and their customers for the near future. We can start with digital banking engagement platform. Now, the need for banks to launch new products and services, creating fully digital experiences for customers and to create more personalized relationships requires the capacity to engage across different channels, including social media, chatbots, mobile, and the Internet of Things, just to name a few. Banks also need to have the capacity to design and launch new products and offerings instantly, create new customer journeys on the go, and to integrate, secure, and orchestrate innovative services from fintech easily. In order to implement these issues, banks can rise by adapting to a digital banking engagement platform, which will in turn allow them to integrate and orchestrate fintech services easily, and to design and launch new customer journeys. They can also create and nurture an ecosystem of partners and developers, thus securing and managing the development of open banking APIs, adopting a unified platform for APIs to design, build, test, secure, manage, and retire APIs using just one platform. And that leads us on to social media banking. Now, platforms and social media are receiving more and more attention as a customer channels. It is necessary to adapt the offers modularly and to distribute or advertise via the individual channels. In the post-COVID-19 era, customer expectations will change. Customers will expect more digital and remote banking options, and social media banking can be a great way for banks to do that. For instance, chatbots. Even before the current crisis, banks were using chatbots to help communicate with their digitally savvy customers. In a period of social distancing and lockdown, these tools have become even more valuable for banks and customers alike. For example, the SIA Bank, the Indian bank can address inquiries on banking products and services. It is trained with a large set of past customer questions and can handle frequently asked questions. And then we come to WhatsApp chatbot, which permits banks to communicate with clients during social distancing and to initiate banking operations. This is a service operated by Sopra Banking Software. And finally, we come to Monster Bank, a new digital bank in the Ivory Coast that offers chatbot banking to its customers. The African-based financial services company offers a fully integrated chat service via social media app WhatsApp. Moving on to new ways of distributing financial products, which is particularly important since traffic in banks' branches may remain low for a long time. Banks may need to find new ways to distribute their financial products. In order to react to this, banks can contract non-financial third-party retail networks such as banking agents in order to provide basic banking services on their behalf. This breaks down certain barriers to financial inclusion, such as cost and accessibility, by providing financial services at locations nearest to the customer. For instance, banks in Kenya, such as KCB Bank, Stanbic, NIC Bank, already provide banking services through agent networks across the country. Banks can also distribute their financial products online or through APIs. Participe helps management companies, wealth management advisors, to deploy white label online distribution platforms in less than a month. On the final note on the midterm steps a bank can take in fighting the COVID-19, we can talk about how they can prepare to reopen branches and on-site services. Now, of course, banks will one day reopen the doors of their physical branches and online and on-site to the public. And when this happens, they will need to ensure the safety of their customers and employees. This is, of course, the first and foremost step, ensuring customers and employees' safety and security. This can be done through protocols raised with employees in terms of hygiene, etc. However, business continuity is also a practical step through the management of services and in-branch traffic. For instance, the Sopra Steria Group has already launched an initiative, COD Ad Casa, to help people organize their shopping schedules and avoid outside queues. This is so that they can spend less time outside their houses, better plan their days, and reduce the risk of infection. That's it from the mid-term steps that a bank can take, but let's quickly look at the long-term steps they can take, i.e. taking the right steps and the lessons they can learn to prepare for the future. Now, of course, the COVID-19 crisis will change customer behaviors, technology expectations, and the financial services culture. Banks will need to be ready for this change, restructuring outdated systems and practices, retraining employees, and adopting an agile approach to digital banking. The rise in remote work as a result of the confinement will likely lead to more of an appetite for remote work options for employees post-COVID-19, especially among younger generations. This means that banks that offer such options will be more successful in attracting top talent. Plus, as many companies are seeing, remote work can solve logistical problems in terms of office space and save money on overheads. As we're seeing, digital investment and cybersecurity are key in the current period, and banks must use this crisis as a reason to redirect resources toward bolstering their digital abilities and cybersecurity defenses. This will help to provide them with the infrastructure to meet the growing need for digital and the growing cyber threats. This period has given banks the opportunity to give something back to the community and begin strengthening relationships with clients. By showing empathy and understanding, banks can build real trust with the public, improving and sustaining reputations. In the short, mid, and long term, banks have a responsibility to help society persevere and prosper. To do this, they can use their resources, infrastructure, and technology. But most importantly, they must use their humanity, taking the banking customer experience to the next level. Thanks for listening to this short presentation. Now, I'm going to be handing over to Laurence Nicolas and Yann Mespesquier, who are going to be answering some of the questions you've been asking during this webinar. Thanks so much.
Thank you, Will, for running this webinar on the behalf of our two companies. Jan speaking. Hello, everyone. I would like to welcome you all to our webinars. We're going to run a short Q&A sessions. We have got a couple of questions. The first one being, and please feel free also to keep asking questions using the Q&A tools below. The first question we received, I'm going to read it out loud, and I believe it's for Laurence. How to lower our risk in terms of risk portfolio management? Laurence, I thought that you selected to answer that question, so please go ahead. Thank you.
Yes. Hello, everybody. Yes, it's a really key point. First, I think you need to be sure that you have the right KPIs and tools to manage your portfolio effectively. You need to check the reliability, the frequency, and the relevance of your KPI facing the crisis issues. I think that you can also rethink of your client segmentation. It's important to isolate the clients with safe days before the crisis to the bad ones. And I think another way to manage your risk portfolio management, I think it's to reinforce your teams in charge of risk, but also in charge of collection, and to give them a major role of supervisory. I think it's a really critical point to put the human resources in this challenge. Yes.
Thank you. We got another question. Will bank have enough resources to manage their digital transformation? So I'll jump in for this one. Basically, what we have seen banks doing since the beginning of the crisis is to reassess priorities. They were all running multiple projects, but some of them are being delayed because they're maybe not that urgent. We talked today about the compliance, for example. Some of the regulation are being postponed, which either free up resources or enable banks to do cost saving. So we're seeing more and more clients now reassessing their priorities. Some of them ask us to delay projects, others ask us to accelerate projects. We also mentioned the DBEP and the engagement platform, for example. That's one part where we see now banks accelerating everything around digital. They want to be able to onboard and onboard partners and create new digital use cases faster than before. In terms of digital transformation themselves, obviously it's based on cost, and whether the bank will go how the bank will go through the crisis will impact very much how much they can keep investing in that digital transformation. One important example I've seen from a bank is they set up a group of consultants or a group of strategy people inside the bank to assess how much their business model will change post-crisis. How many branches will they need still to run? How faster they need to go in terms of digital banking. So they use this crisis as a massive A/B test, basically, around their strategy in terms of digital banking. Now, moving back, we got another question around actually it was around the digital engagement platform. So that's the one I kind of answered it right now. We got another question on if there will be a deregulation of banks during the crisis, then how can bank guarantee trust among their depositors? Risk of bank run, for instance, may worry depositors. It's around the trust aspect of banks. Laurent, do you want to give it a try, or should I go for it?
No, let's go.
Okay.
I will let you.
Okay, I'll go for this one. So in terms of trust, I think it goes back to the trust in the states. In most developed countries, trust in the banking system is backed by the states, as states have guarantees, and they back up the deposits of their clients for banks. So as long as our developed countries, states are, the trust in the states remain intact, you will probably see that the bank's trust remain intact as well. Compared to 2008, I think we have seen a huge difference as the financial sectors have not been attacked as much as they have 10 years ago. It's probably the result also on many structural reform which have been passed over the past 10 years. One thing that we have seen in the press over and over again is banks are much stronger today, and the crisis is proving it right for now, at least. I think we are pretty much done for the Q&A. I'm looking at the list. We got one technical question. We will answer it offline, going back to our experts and sending you an email. But other than that, I think we're done. So I would like to thank everyone for participating in this webinar. Please feel free to reach out to our experts if you have any more questions. We will follow up by email and try to bring you the best answers. Thank you, everyone. Thank you, Will, for running the webinar. Have a good day and stay safe. Bye-bye.